Hello and welcome back to Investment Insights. I'm Jamie Gordon, editor at ETF Stream, and today we're going to be diving into some of the themes that might be shaping ETF markets in Europe in 2026. Joining me to do that, I'm delighted to have Amanda Rebello, who heads up ETF and index fund sales globally for UBS Asset Management. Amanda, lovely to have you here.
Thank you for having me.
So, Amanda, could you tell us a few of the trends your team and you're seeing that could define Europe's ETF market through 2026?
So I think the number one trend that we're expecting for 2026 is probably going to be another record year. Every year we keep surpassing the AUMs that we're seeing within the European ETP space. And it's great to see that we see more utilization, not just from European investors, but also more and more so from Asian investors who are still favoring the UCITS wrapper for a number of different reasons, and also Latin American investors as well. So I think we'll see more of this expansion of utilization outside of Europe. We also are keeping a keen eye on the trends in active ETF utilization as well. So really interesting to see that last year 1,300 new products came to market and 85% of those were active fund launches. So quite intriguing as well, because it's the pivot point for active launches having overtaken passive launches as well on the ETF side. And we at UBS, we have very strong active capabilities. So we are Europe's largest index manager, but we have, through the Credit Suisse acquisition, made some interesting, have some new teams which have come on the thematics equity side, also on the structured credit side, and to try and use the ETF to bring to market some of these interesting investment capabilities is something that we want to more proactively focus on. The good thing is that we do start to see more demand, or let's say more openness from investors to use the ETF for these kind of strategies. And then last but not least, thematic investing. So we see that there has been a trend in this last year. A lot of that has been focused on AI and tech in particular, but it's been interesting to see that that's not just been a US story, it's also been like China tech, for example. And we now start to see more inquiry, more conversation on other themes now, like healthcare, aging population as well.
Obviously, you mentioned AI being one of those hot button issues for investors right now. Where are you seeing the most demand for products generally, whether it be AI theme related or more broadly? And how is that shaping how you're thinking about product strategy in the year ahead? Also, how is that varying across regions?
Great question. So I have to give a very boring answer. It's always nice to talk about these more esoteric exposures, but at the end of the day, within the broader industry and also within the UBS ETF franchise, the bulk of the flows came in MSCI World. So it's still the core benchmarks. The good thing is that we as an organization can play in that more. We did a price reconciliation in 2025, which has led to us having a record year for our platform this year. And so we do anticipate that will still be a key driver of flows. But what we see is that, a big question, important question that's being asked at the moment, especially as we're doing kind of calendar rebalancings in the industry, is, am I too long US equities? And so clients are thinking about, am I allocating to the right names within US equities, but then also am I thinking about the right sectors, small, large, mid-cap kind of breakdowns. Factors are coming back into discussion as well, which is interesting. So that was a very hot topic, let's say, kind of 8 to 10 years ago. It went a bit quiet, just as everyone basically intrinsically bought momentum. And then now we start to see value coming back on the table as a consideration as well. And then last but not least, I would also highlight that currency hedging has become more of a discussion point as well. So we might anticipate that there is maybe more opportunity in terms of incorporating currency hedging, especially on the equity side, into portfolios. If we look at just, for example, the utilization of currency hedge share classes and ETFs as standalone sub-funds, in 2017, we had about 56 billion in assets as an industry within those kind of exposures. And then at the end of last year, we had just shy of 300 billion. So the utilization has increased massively. I think a large part of that is that if you're going to have your largest exposure in a non-local currency, which all European clients would be having, then are you conscious in your decision to be long dollar or not. And so a lot of clients did get burned on that last year. And so we're having a lot of discussions with clients as well in terms of, are you intending to be long dollars? And if not, then do you want to hedge all or some of that?